Hello everyone. Now, with the introductions out of the way, we are diving more or less straight into action. Naturally, I did some preliminary reading and research to figure out the basic premise of crypto trading, as well as some necessary concepts and ideas. However, for the sake of this not turning into a straight-up lecture of questionable quality and even more questionable entertainment value, I will quite soon be going directly onto a cryptocurrency exchange and trying to make my first trade. During this process, I will be pausing to explain my current understanding of various things as they come up. This may be helpful to you, but it will definitely be helpful to me, since I am a firm believer that as you explain something to others, you gain a deeper understanding of it yourself. This approach will highlight any gaps in my knowledge and will force me to build a more solid and logical picture of each particular thing. I will also be using a framework of explanation that I have learned a decade or so ago and which comes from good sales practices. Most things will be covered by asking these three questions. Number 1. What is it? Or the definition. Number 2, what does it do, or the function? And finally, number 3, how and where is it useful, which is the application. Alright, first things first. You may have noticed that we already have 3 things to explain. What is a cryptocurrency, what is an exchange, and what is a trade. There are probably dozens upon dozens of books and videos and articles on all of these, so I will try keeping my points as simple as I possibly can and stick to a level of detail that is sufficient just to start trading. Cryptocurrencies are virtual money that have no physical form and no intrinsic value other than the value attributed to them by the market. Cryptocurrencies have no direct link to anything tangible in the real world, with the exception of so-called pegged cryptocurrencies, which we'll cover later. To somehow quantify this value in terms that a regular person would understand, it is compared to a regular fiat currencies such as the US dollar. So 1 Bitcoin is said to be worth around 20,000 US dollars, meaning that generally buyers are willing to buy and sellers are willing to sell 1 Bitcoin at around that price in this particular moment in time. Of course, the prices of cryptocurrencies can be affected by real-world events. Just look at what Elon Musk did for Dogecoin. However, this link is not direct. The events influence the behavior of buyers and sellers, which in turn is reflected in the price. Across these videos, cryptocurrencies will be used as assets to be traded for profit. Cryptocurrency exchanges are platforms which make it easier and faster for people to buy and sell crypto. They connect buyers and sellers of whichever cryptocurrencies are listed or available to be traded on this particular exchange, and allow these buyers and sellers to make trades with each other while ensuring transparency and security of these transactions. And for that, the exchange charges a commission on each transaction. That's how they make their money and support their infrastructure. Throughout these videos, an exchange will be used to conduct all trading activities. Let's take a little break for a little personal insight that I had while making this video. In movies, when they show stock exchanges and traders and brokers, there is almost always a scene where someone starts yelling over the phone, "Sell, sell, sell!" and they want to get rid of some bad stock that they have. And I always kept wondering, wait a minute, if this stock is so toxic and undesirable, who's gonna buy it? What if nobody wants it, and where does it go then? Well, there is nobody else on the stock exchange except other traders, and someone will want to buy it, but the catch is, at what price? This is how a price of an asset might go down. There exists a supply, and there also exists a demand, but at a different price point, lower price point, sometimes much lower. People have their own reasons for wanting to buy or sell this or that thing, and their appetite to do this depends on the price. But let's get back to our explanations. Lastly, what is a trade? A trade is simply a completed and irreversible transaction or sequence of transactions between a buyer and a seller on an exchange. Apparently, an exchange is not a Walmart, and there is a no returns policy. If you made a trade and you don't like it, well, tough, you'll have to deal with it. In my videos, I will be making a number of trades, and the outcome of each of those will be either a profit or a loss. Now, how do we go about selecting an exchange to trade on? I found this fascinating little site called whale-alert.io. It has this live transaction map. The circles represent some of the major exchanges, and the shooting stars are large transactions between them. It's quite mesmerizing to look at, even though there is no immediate practical use for these graphics. But why are we here then at all? Well, clearly it shows you that Binance is the vastly superior and the greatest exchange of them all. Just kidding. Of course you don't pick your exchange based on the pretty picture, but I was gonna go with Binance anyway, as it is the largest and the most well-established exchange available today, and it seems to be the default choice for beginners like myself. They also have a learning and reference section called the Binance Academy, and I hear there's some good stuff in there. We'll be checking that out sometime later. So let's go on to the Binance website and register, since obviously these days you cannot do anything without having an account. I chose to use my Google account to register just to make the process a bit simpler. Next, once you have registered, it tells you that you have to go through a verification process. Apparently, since August 2021, you cannot do anything unless you get registered and also verified under a KYC policy, which stands for Know Your Client or Know Your Customer. The requirements and review times for this verification may vary from country to country, but the bare minimum is as follows: your personal information, such as name, date of birth, your government-issued ID, and a facial recognition process. I went through this process myself, and let me tell you, it was just a tiny bit annoying. You have to take live photos of your ID with the camera. You can't just take some existing photos and upload it to their website. And the same goes for facial recognition. You'll have to stand in front of a live camera and give them time to recognize your face. A static photo just won't do it. So this can be done either by using their app on your phone, or if your computer or laptop has a webcam, then you can use that. Let me go on a little bit of a tangent right here. When you think of cryptocurrencies, you think, oh, decentralization, complete anonymity, no outside authority looking over your shoulder. Well, all of this really crumbles down completely when it comes to major crypto exchanges today. The governments, being what they are, understandably and rather quickly got wind of the huge potential for control, for regulation, for taxation. So now the crypto exchanges have to comply in order to remain functional. And you will have to give them just about as much personal information as you would have given a regular old bank. Actually, Binance themselves do acknowledge this somewhat ironic state of affairs. Right here. And then they go on to explain all the benefits of verification. However, the long and short of it is this. KYC is a binary gate. You either give up your anonymity and get in and trade, or you stay out the door. There is no in between as far as I can see. If you are extremely privacy conscious, I absolutely understand, but Binance says that your journey to trading must end here. I personally have weighed my pros and my cons and eventually decided to proceed. So let's wait for my verification to come through, and let's see what Binance has to offer in the next video.